That about does it for this report. Let me get my aesthetically unpleasing face off your screen and move to the regular portfolio segment, in which I talk to regular non-expert folks who work in non-investment related jobs, and they just want to talk to me for some reason. And if you're a regular person and you want to chat to me for some reason, just send me an email at antonio@resourcetalks.com and we'll sit down for an interview. And episode 11, this is, I wanted to make a joke, but I don't really have inspiration for any transition jokes, so let's play the clip on here. All right, Enrico, so far I know very little about you. Basically, you're an Italian who moved to Canada, and you're now Italian-Canadian. So, yeah, tell me about yourself. Why did you move to Canada? What do you do for a living?
So, hi Antonio, and nice to meet you. And yeah, I moved to Canada in 2015 with my family.
Mm.
And the reason why I moved to Canada because I had a professional opportunity that, in my opinion, I couldn't refuse. And so we decided to take that challenge and live this experience. So far, it's been a very good experience. And yeah, what I'm doing for a living, I'm the president of two Canadian companies that they operate in the aerospace defense, power generation, oil and gas, medical industry, and nuclear.
Mm.
And yeah, I've been in Canada since 2015.
Mm.
And here in Canada, I learned more about natural resources. That's, as many people know, they're very, very common here. Like Canada is very strong in oil and gas, natural resources, and
Yeah,
most uranium.
definitely. What do you have to be good at? Like, what skills do you have to be good at to be good at your job? What does your job require from you?
Uh, I don't think I'm good at all, but other people, other people
I mean,
say
you're the president of
I
two
am.
companies. How's that not good?
Uh, you need to love what you. So you need to like what you do, and I think you really need to put a lot of effort to learn what you are doing and why you're doing it. Because if you don't like it, I'm not saying to love it because probably you love something that you is less time consuming and taking away a lot of your private life, but you need to like it a lot because it's requiring a lot of commitment and you have to be able to let's say sacrifice some of your personal time to keep up with what the business needs. You need to understand people, you need to understand your customers, you need to understand the market, and you need to be reasonably good on communicating with people, but mostly to listen. And normally, in a conversation, the most difficult part is listening. A lot of people, they are hearing you, but they don't listen. They hear to you to reply to you, not to listen and understand. That is something that is some some quality that you don't find a lot. And as soon as you understand that listening is very important, it's giving you a lot of advantages versus other people.
Hmm. Hmm. Are you able to use some of the skills that you've learned to be able to do your job? Are you able to use some of that for your investments?
Yes. Yes. Uh, Luckily, my job involves some of financials understanding. I'm exposed a lot of to these numbers, and I have a master in business administration, so I know how to read balance sheets and all this stuff. And yeah, it's helped me not a lot, but it gave me a good solid base. Not hiding, I took other financial courses, specifically natural resources, because that segment is a bit different than what we do. This is more manufacturing, so I think it's much easier, more predictable. Uh, natural resources segment is, in my opinion, the wide west. Not in terms of the finance, but understanding the dynamics behind uh, the assets, the recovery, the grades, uh, the cost,
Yep.
uh, potential of failures, capital intensive business. So it's a different model that you need to have. And so I had to learn that, but I had the fundamentals from my job. That's all I already had. That to answer the question, yes.
Yeah. Okay. So how have you split your portfolio knowing that? Because you're right, and I agree with you, but does that mean that your weighting towards natural resources is smaller than your broad market portfolio, or is it all natural resources? How do I look at it?
So my portfolio is right now it's 100% natural resource.
Okay.
I have nothing investing in the broad market right now. Uh, I have a reasonable amount of cash, reasonable 25%, let's say, is in cash, and is in cash for because we are going through this, in my opinion, challenging times in the markets, but also in the global economy, potential recessions, geopolitical instability. So I have, let's say, 25% is in cash.
Okay.
I own precious metals, physical precious metals, gold and silver. And the reason why I own them, gold is, despite a lot of people are saying it's a bad rock, blah, 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 doesn't generate cash flow, whatever. I still believe and I agree, it doesn't generate cash flow. If I put that money somewhere else in a, let's say, in a dividend company or whatever, we get dividends, that's true. But you don't have it. It's the only asset that doesn't have any counterpart risk.
Mm.
And in this environment, I think it's good to have. I hope I don't need it, but it's something that I really enjoy to have, and it's helping me sleep at night. That's for sure. And also cash. Cash is, as somebody defined it, is an option premium that you pay to step in the market at the right time if you have the gut to do that. So having the cash is one portion, but then stepping in the market at the right time is a different thing. So you need two things. I have one. That's I don't know if I will have the second.
Mm.
That's anyway. Yeah, it's 100% natural resources and heavily weighted on the uranium.
Okay. Okay. What's the most recent thing that you bought? Have you been buying throughout some of the volatility that we've been through recently?
No, and the reason why is because I entered these investments in early 2020.
Mm.
So my entry points, they are still below where I am now. And I allocated all the capital that I defined reasonable to this segment. And so, no, I honestly, uh, maybe would be disappointed for somebody, but I trimmed some positions, like chemical, I trimmed it when it was up to around 40s, because it was, in my opinion, ahead of themselves. And not because I know something that anybody else doesn't, but because we went through this up and down probably two or three times already, plus 50, minus 50, plus 50, minus 50. And the first two, I went through the roller coasters. And the third one, I said, let's let's take some profit, let's take the moon, and let's see what's happened. So they went down, and so I'm still up. I don't want to invest, put back money on a price that is higher than what I bought the shares.
Okay. What if you had to, though? What if there was a gun to your head right now and they told you you sell everything that you have in your portfolio right now and you only have to buy three stocks? Which stocks would you buy?
Uh, so far, they will be on the uranium industry.
All three of
And
them?
yes,
Okay.
and they will be chemical because I still believe is the strongest company in the sector. After the Westinghouse acquisition is even better, in my opinion. And I think the market really well misunderstood that move because that's giving to chemical the opportunity to vertically integrate it, upstreams, downstream, and compete directly with the Russians on the fuel cycle.
Mm.
It's going to give the opportunity to chemical to supply fuel for the not only for the CANDU reactors, but for also for the light water reactors that they today they don't have it. So it's a no-brainer. Chemical, it's like crossing the ocean on the aircraft carrier. So you are going to go through that very easy, in my opinion.
Mm.
Instead of owning like I don't know an explorer that is crossing the ocean on a sailing boat, and it's going to be tough.
Yeah, crossing the ocean, metaphor for an explorer is probably like crossing the ocean with like a rubber band on you. Not a a sailing boat would be fine. People do that all the time. They get there alive. But I mean, yeah, it's a rough ride. Yeah, I have a lot of explorers,
Exactly.
so
And the second one is global atomic.
okay.
And the reason why it's global atomic because I'm following the company for a long time, I'd say, and they have the highest grade deposit in Africa. They are advancing it, so they are working the talk. And historically, if you go back and do your homeworks, blah blah blah, to put a mine from discovery to production, a uranium mine, is taking from 10 to 12 years. And Cigar Lake, it took 33 years
Mm-hmm.
from when they discovered it to when they put that in production. 33 years. So, reasonably, I don't think anybody is going to produce significant amount of pounds in this cycle if they don't have start digging holes or having a real production or at least beginning of this production.
Mm-hmm.
So global atomic, in my opinion, is the closest. There are other assets like Anchor is close to get positive cash flows. I like the Australians like Boss and Lotus because they already have assets that they can turn on, and I own them. But they will be one of the top three. And the last one is Kazatomprom
Mm.
because it's the second aircraft carriers in the industry. So you don't go wrong with that.
Yeah.
Yeah, you have a geopolitical risk. That's fine.
Mm.
It pay a nice dividend, Kazatomprom. It does. And I believe they will be able to get their pounds out of there in one way or another.
Mm.
So that's what the challenge of the company is, the ability to get the pounds out of the Kazakhstan. And they have options. They're working on that. They already did in the past. So I believe they can do it.